And welcome back, everybody. The next session is Can Open Finance Succeed? And before we start, we've just posted a message in the chat, but just so everyone knows, there's been a change to the billing. Kalyani Ravi sends her apologies. She's not feeling well today, and she won't be joining us. But very, very thankfully, her colleague, Nicole Sandler, who's head of digital policy at Barclays, has very kindly stepped in at the last minute to fill her place. Now, to moderate that conversation, we've got a fantastic external moderator. Iana Vidal is the head of policy and government affairs at Innovate Finance. Hello, Iana. How's it going?
Hi, really nice to see you.
Good to see you too. Good to see you too. I'm going to hand the stage over to yourself so you can introduce your panelists, and then I'll be back on about 5 minutes before the end to bring in some audience questions. I'll pop on and drop those in. So have a great panel and speak to you in a few minutes.
Thank you. So thank you everyone for joining us today. We've got a really great panel of speakers, as Ollie said, on open finance and open data. So I will allow them to introduce themselves, but to run through the speakers who have been well promoted by the AltFi team. We have Claire Riley, who's Head of Corporate Development at PensionBee. We have Francesco Simonesci, who's CEO and co-founder at TrueLayer, and a late substitution to the billing. We are very grateful that Nicole Sandler, who's Head of Digital Strategy at Policy at Barclays, is able to join us. So thank you all for being with us today. So I'm going to, on the basis of time and that we've got a great discussion happening, I'm going to jump straight into questions. So the headline question is, can open finance succeed? So I'll go straight to a bit of a provocative one. Is open finance overpromised and overhyped? And is that a problem? And perhaps I'll start with yourself, Claire, for that question.
Hi everybody. Is open finance overpromised and overhyped? I mean, I actually think the problem is that open finance is massively underpromised and underhyped, and that's why it doesn't exist yet. I think sometimes in the fintech world we live in a bit of a bubble, and I think that, you know, for us it feels a bit overpromised and overhyped. But I think if we stopped 9 out of 10 people on the street, they'd probably return a blank when you said to them, "Do you want open finance?" You know. But then if you explain to them what open finance is, and you explain to them the potential of open finance and the freedom that it would give them, you know, for getting them out of debt, keeping them out of debt, switching them into better energy contracts, mobile phone contracts, pension contracts in a way that wouldn't require any headspace or hours poring over a spreadsheet on their behalf, then I think, you know, everyone's going to say, yeah, I'd love that. Like, I want to delete those 10 apps on my phone that I can't remember the password for. Like, of course I want that. And so I think really the crux of the issue is that we're not doing a very good job of promoting and explaining open finance to the wider public. And I think if we had a massive consumers behind it, calling up all of their providers across all of their financial products saying, hey, I want to share my data. If you don't give me my data to share, I'm going to leave. Right? If we had that, I think we'd have seen open finance a lot earlier. And so, yeah, so I think it's not been promoted enough, and I don't think it's been hyped up enough. And I think that, you know, that's the job of, you know, the panel today and of everyone working in different sectors to push it out more to customers, to drive up awareness and expectation and imagination that this is possible and this is the future.
Thanks, Claire. Rallying cry there. Nicole, what are your thoughts on this from Barclays' perspective? Oh, I think Nicole might have frozen. Claire, you've
so first of all, because my connection paused, so it may be that I need to turn my video off.
I think we can hear you now. To continue.
I'm turning my cam off. Can you hear me?
We can.
So I sit on the other fence. I don't think that open finance has been underhyped or overhyped. I think it's probably been hyped to the extent that it should be. I guess my view is that actually I think it overpromises, because from where I'm sat, there is a lot of valuable data out there than financial data that will help the financial ecosystem, that will help our consumers at large. So whenever I look at open finance, I actually, going to be quite honest, try and get right over into open data, because I think that's a lot more valuable as a potential initiative than open finance, because it encompasses a lot of sectoral data that I think would be more valuable to financial services than just open finance. And the reason I say that is, you know, if I look at the COVID-19 pandemic, I see a lot of data that's being shared, for instance, with healthcare and telcos. That's something that you naturally wouldn't think of, but it's particularly valuable. So I sit on the other end. I personally think that whilst I understand why people argue for open finance, I think regulation takes a very long time to come to fruition. And if looking at use cases that would be beneficial, we should be more ambitious, which I actually think is in line with what the national data strategy from our government is now.
Thanks, Nicole. I think we're still struggling with your connection, so we'll see what we can do to bring you in there. But I think that's a really good opening to provide people with some understanding of what's happening in the policy world on open finance. So I move on to my second question now. Open banking took years to come about in the UK, and its adoption, whilst accelerating, will take years still to come. Will open finance be any different? And obviously, Nicole, you've touched on this, but how has COVID-19 affected this timeline? And Francesca, I'll come to you for this question first.
Sure. Look, we as TrueLayer, we have been in the open banking kind of bandwagon since the very, very beginning. So I have seen the whole trajectory and how that worked. And let me say that I think what we struggle to conceptualize is that this kind of innovation is actually non-linear. It's compounds over time, and it takes certainly a period of time to be fully applied, but also it grows with an accelerating path, which is sometimes very hard to grasp. And so when it comes to open banking, like, it took a very long amount of time to be written in law and discussed at regulatory stage, and then it took a lot of time to be implemented at first, and now it's taking a little bit of time to be perfected. Now, what is happening all around the world is that this old knowledge is compounding. So the next chapter of open finance and the new initiatives that you see everywhere are actually benefiting of all the work that happened before, all the risk that has been taken, and all the solution that has been found. And so you see around the world countries like Australia and Brazil that are getting onto the open finance framework by extending the work that has been done around open banking and delivering that at a fraction of the time, with a great sense of iterating on top of what is a best practice that somebody else established somewhere else in the world. And so then if you look at the angle for consumers, I think is very similar. You go through an early majority, an early stage group that becomes incrementally more comfortable into using that sort of consumer experience. And so we have seen this sort of trajectory panning out over time. And so to also touch on COVID, that is clearly accelerating the need of digital journeys. And so just to, for instance, to put it in the context of payment initiation, we at TrueLayer, we've seen a tremendous amount of growth, like something like more than 800% growth during March to July, which are the months of the lockdown. Now, I don't know how much is related, but definitely like we have seen a huge shift into consumer adoption into digital journeys as being extremely important. And this is setting I would say a whole new bar about what is acceptable to do for consumers. And so going back to Europe and the UK, when I think about open finance, I believe we still have to open up more data that is available. Very simple things like investment, savings, loans, those are, I think, expected to be there from a consumer perspective. But they are not. And then we can focus on payments and how important is to nail the payment use case in verticals like e-commerce. And I think we have a huge opportunity to disrupt legacy infrastructure like card payments. And open finance, I think, has the key to go into that direction.
Thanks, Francesco. A really good overview there of how far we've come. Nicole, I'll turn to you for this question. Hopefully you'll be able to dial in and we can hear you clearly. Well, it looks like we might have lost Nicole completely, which is a real shame. In that case, I'll move on. So thinking sort of ahead to what's happening in the policy world.
Can you hear me now?
We can hear you now, yes, Nicole. Can you hear us? I think we might come back to Nicole. Claire, I'll turn to you on pensions because obviously we've got the pensions dashboard.
Sorry, apologies.
I've lost it completely. We've got the pensions dashboard developing at the moment. Obviously, pensions dashboard, open finance, often discussed in the same breath. Are the two even related? And if so, what can we learn from the pensions dashboard that we can apply to open finance?
Yeah, so I think the first thing to say is that it's really essential that we separate the pensions dashboard from open pensions or open finance in general, because the dashboard is primarily about reuniting consumers with their lost pensions. And that has one quite narrow use case, whereas open pensions, and by that I mean bringing pensions into the world of open finance, is much broader, and it's about building ownership of pensions for the vast majority of people to make most of the money they know they have. So that's found pensions, right? And so they can make decisions which will lead to a better retirement. And I think for a really long time, it wasn't kind of clear what the difference was between the two things. But now that we've had some recent announcements on the dashboard, they recently announced that at the beginning of 2023, we will start to get balances and provider names for consumers. So I think if we look at the time it's going to take to get the sort of information on these lost pensions on the dashboard, we mustn't allow the open pensions, the dashboard, we must allow them to develop in parallel rather than sequentially, because otherwise it's going to be sort of 2030 before we see open pensions. And the thing is, in the grand scheme of things, lost pensions are actually a really tiny problem. So the ABI and the PPI did a piece of work a couple of years ago, and they discovered that lost pensions account for about 20 billion. They're worth about 20 billion, which is of course a huge amount of money. But when we look at the size of the whole pensions industry, which is now worth almost 1 trillion, a defined contribution market, it actually only represents about 2%. So it's really, really important that we actually focus on these two developing sequentially, because the open pensions and open finance, or bringing pensions in, can have 50 times more impact for consumers than the dashboard will. And I think when we start to think about lessons from the dashboard, particularly, I think what we need here, and you know, the dashboard's been talked about for around 20 years now. And you know, we really haven't seen any progress really in the 20 years, and obviously we've got something now in 2023, but it's taken a really long time. And so I think one really big lesson here is a consumer-based approach. And so, you know, whoever does lead on the work, whether that's the FCA on open finance, you know, you really need to consider what the use cases are and build the data standards and processes on those consumer use cases, because, you know, the use cases need to focus on helping people make informed decisions about their retirement. You know, so one use case we expect for pensions is that savers can switch into better value, better quality, newer products. And so they'll need something like charges data. So charges data is very interesting because the pensions industry don't share charges data. So if you have a pension in your annual statement, which you see yearly, it won't tell you how much you're paying. And also you'd really struggle to get that information. And the reason is because the industry have lobbied against sharing that information because it's too difficult for them to get and it's too complex for consumers to understand. And so I think what's really important from this consumer first approach is that we really mustn't allow the sort of incumbents they can help set the data standards, but they should not be allowed to decide what the data standards are, because as we've seen in pensions, then that's not really worked for consumers.
Thanks, Claire. That's a really good overview there. So I think we've hopefully got Nicole back. Can you hear us okay, Nicole?
I can hear you. Sorry, I've changed devices and rebooted, so hopefully it will allow me to. Obviously, didn't want me to talk about open data. It was like, no, open finance is obviously the future. Let's put a roadblock up.
The wonders of tech.
The wonders of tech. If I can go back to one of the earlier comments when Francesca was talking about open banking and open finance and things taking a long time, I absolutely agree with that. But that actually, to me, is one of the other reasons why we should be jumping over open finance into open data. If we take the view that regulation takes, 5 years to come to fruition, by the time we put an open finance framework into place, let's say that takes 4 years if we're lucky, we're then looking at another 4 years till you get to the open data. I see some problems with that. The other issue that I see is if you look at what's going on in Europe, so you look at the recent digital finance strategy, and then you also look at the national data strategy from the UK, whilst they talk about open finance, they do also talk about cross-sectoral sharing. So you could be in this, I don't want to use the word unfortunate, but a slightly unusual timing where you're working towards open finance, but actually open data comes in first. Then all the work that you've done in open finance, to me, almost becomes redundant, because why would you switch back to a sectoral approach when you have a cross-sectoral approach that's already including the open finance within it? So that's where I mainly struggle with this as an initiative. I say it's where I mainly struggle. It's one of the areas I struggle on timing, but also just in terms of the valuable data for our consumers, as I mentioned earlier, but I'm not sure if you heard me because the connection was terrible, will come from a much wider set of players than just finance players. And COVID-19 has shown that, and there are other use cases that will show that. Sustainability, if you want to do sustainable products, I'm not going to get my bank isn't going to be able to create those products based purely on financial data. They're going to actually need to get some data from sustainability data. So those are some of the challenges that I see in on the timing point. So apologies that we went back. I wasn't sure how much that you heard.
No, that's absolutely fine. That's absolutely fine. We'll skip on to the last question now, because I think it's looking beyond what we have at the moment. So given open finance will obviously stretch far beyond the CMA 9, how and who should develop these standards? And perhaps Francesco, I'll come to you for this answer first.
Right. I think this is a question that is often, I think, it's a little bit strange to answer that, because the reality is that we think about a standard as a technical standard, but the reality is that the most of the problem is not at that level. The wire protocol is just fine. Actually, I would say at this point is almost a trivial activity. Like we can get some technologists in a room and they will agree what is the best possible way of describing a way of either sharing data or solving for a use case. Now, where all those framework fails is at the regulatory level. Like, just to be very clear, if you take the example of PSD2 in Europe, the reason why it's taking way longer and several iterations in order to become a mainstream channel is it's not because either Berlin Group or STEP or Polish API or any other weren't a strong technical standard. The real problem is that RTS, as in the regulatory technical standard, which is mainly a law, is a piece of regulation, was too stringent on certain areas and too vague on certain others, and that's really the problem. That when you come to this sort of space, you need to have a few use cases in mind, and often we see that those use cases at the regulatory level are not really well thought through. And they are really not thinking in terms of what is going to be the real application and how we are going to bring this proportionate value into the marketplace and increase competition. So going back into okay, who should do that? Like, I think it's totally fine that the regulator takes the lead and has a little bit the key of the conversation. But at the same time, we need to keep those collaboration frameworks fairly open to create also commercial incentives and other incentives, so that different stakeholders can really understand why they are doing certain things, and why those things are going to solve real customer problems. And so again, the role of the regulator is to coordinate all those efforts, probably step into breaking certain incentives that are not really clear at the very beginning, but then leave the market to solve the problem and find solutions, also using a commercial hat and a commercial framework, so that incentives can be aligned into bringing some innovation to the market.
Thanks, Francesco. I think that the idea of incentives is really important if we're going to get the wider industry rowing behind this for the benefit of consumers. Nicole, I don't know if you had any final thoughts on that question as well before we open up to the audience, hopefully, with Ollie popping on in a sec.
I guess the only thing that I would add, and this isn't what Francesco is saying, but I just want to make sure that it's not misunderstood by the audience. Well, maybe I misunderstood it. I don't think Francesco is saying that we should not have regulation when we look at things like open banking, open finance, open data. But when it comes to the standards, it needs to be much more collaborative in terms of how we actually get to those standards. Because I think that there are some that think that maybe voluntary measures when it comes to open finance or open data would be sufficient. And, you know, I work for a large established bank. I can tell you that I do not believe we would have shared as much data if we were not mandated to do so. And I think that will follow through with other players. In terms of the standards, I absolutely agree. I think there needs to be as much collaboration as possible. I guess where I slightly struggle is the whole idea of a framework is to be future-proofed. And it's very difficult to know what all the use cases will be when you start doing the framework. There will be some that you will know initially, but others that you won't. So, you know, I don't envy the regulators. I think it's very difficult sometimes to put a framework out and put standards out that are going to cover eventualities that you don't know about. But I guess that's where there's a slight nuance. Yes, we can do standards for some use cases, but the framework needs to be flexible and adaptable to be able to work towards other use cases. I'd actually have an advisory group personally set up if I was one of the policymakers, working with industry that way as well.
Hello, everyone. Sorry to interrupt. First of all, well done on persevering through technical difficulties. It wouldn't be a digital event if something didn't go a little bit awry. We do have some audience questions, and I want to make sure we get to them. So let me just dive straight in. The first one is from Keval Shavda, who's asked, whose responsibility is it to improve customer trust and confidence in open banking / open finance? And what's the best way forward for this? Claire, I'm going to pick on you. Sorry to throw the question your way to start.
I think, I mean, looking through the prism of pensions and trust, I think right now people just don't have any data at all. They need none. It's impossible to get any data in a standardized way. And it's really interesting, like listening to Nicole's points around open data, and I wholeheartedly agree with them. But from where I'm sitting in the pensions world, we don't even have any data in digital form for most consumers. Like some of it's still on microfiche. So open data seems like this utopia that I can't even begin to imagine until we've sort of got the data in digital form and we've got it into the consumer's hands, and we've kind of got over this idea that it doesn't belong to them, which, you know, you still sometimes hear in the world of pensions. But so I think from building trust, I think we just need to get the data into the hands of consumers in my industry before we can start building the trust about how we're then going to use that.
And Francesco, from your side, what do you think about building the trust? Do you think the groundwork is being laid with open banking and it's a continuation rather than having to change everything next time around?
So I try to be practical here and look at the data, because for several months and years we have been thinking about the trust mark and who should build this trust mark and so forth. And you never really solve for that. Is very complex. Then I look at the data. The data shows clearly that there is a lot of consumer confidence already in there. So the only problem really that we need to solve for is, can we make the user experience very streamlined and very easy for consumers so they can get to the value fast and securely enough? And that's kind of the biggest challenge, I believe. So if you think about the chain of trust here, you're dealing with high street banks, or anyway very large financially regulated companies, which are usually like the source of trust of the consumer interaction. And then they are sharing data with other third party, which are often, I would say 100% of the time, also regulated entities. So consumer get it. It's not that big of an issue, and the data clearly shows that. The problem, once again, is, can we build a consumer experience that is streamlined enough so that level of interaction can happen at scale?
Fantastic. And Francesca, I'm going to stay with you just for a moment to also ask, TrueLayer recently expanded to Australia. And I wanted to ask, what does we've spoken today, and it's been quite a sort of UK European centric conversation. What does the global picture look like for accessing more data, more financial data?
Right. So I said before, and bringing the example of Australia and Brazil, they are a different point in time. Australia is already at the implementation stage. Brazil is still between regulating and developing the first iteration. But they are both using this open finance framework. It means that within the scope of the regulation, you don't just got payment accounts, but also you got pretty much everything. So identity data and saving accounts and pension and investments, and all the way into telcos and other, I would say, utility data. And also will extend to payments very, very soon. Also, the liability model is slightly different than what we have here in the UK, and there is a concept of reciprocity, where basically in order to consume data, I also have to be okay sharing data myself. So that creates a different set of incentives and a different, I would say, environment where data is shared at scale. Now, rest of the world, removing like for a moment UK and Europe, is also a little bit nuanced, and it's halfway between, I would say, a regulatory-led model and a commercially led model. So you got places like Japan, for instance, where the regulator says very vocally, I want the banks to start building open banking APIs and open finance interfaces, but I'm not going to mandate that. I'm going to leave the market to organize themselves and find commercial agreements before actually stepping in and regulating. So the moment that I do that, we already have some historical knowledge, and this is progressing at different rate of success, I would say.
Fantastic. I'm afraid we have run out of time, but can I just say a really big thank you, Nicole, Claire, Francesco, Iana. Thank you for moderating and being part of this conversation, and have a great rest of your days.
Thank you.
Thank you.
Thank you.
Bye-bye.
And next up, we're going to be talking about fintech as a tool for financial inclusion. So we'll be back with you in about 2 minutes' time.